Hello, this is Mike Swanson of Wall Street Window. I got a very special guest with me today. I'm speaking with David Skarica, runs the website addictedtoprofits.net. It's Wednesday. The market just closed, and I'm wondering, what do you think of what's going on?
Well, I think it's kind of interesting because I actually just did a series. If anyone goes to my website, addictedtoprofits.net, you'll see a bunch of podcasts that I posted over the last few weeks. And I did this kind of series called the Past Prelude. And what I talked about in the series was I was looking at these past kind of market scenarios. Like I was looking at, the crashes of 29 and 87, the bear markets of 37, 2000, and then other bear markets like 73, 74, 1907, things of this nature to show you how the market can trade in any potential kind of scenario. Now, the one reason I'm so adamant that I think we're in a topping process is just quite simply the valuations. That's another one of the podcasts I did. I talk about price to sales, market cap to GDP, these kind of more macro indicators, in my opinion, more accurate indicators than, say, price to earnings. The problem with price to earnings now is with all the financial shenanigans and engineering used by cheap money and buybacks, the earnings are very, very inflated by these companies because they've been able to, take away the number of shares outstanding, which inflates your earnings per share, right? So I talk about all these things. So, and then I'm just going to say, well, how can the market trade? And then, in the 29 and 87 crashes, there were like corrections like we're seeing now in the first half of the year. And then the market had a final blow off into the summer with poor internals. But in some of these other corrections, like 1906 to 1907 or 73, 74, you saw the market basically top, or the Nikkei 1990, in the December, January period, and then actually begin to start to really roll over in, kind of the second, third quarter, and then into later in the year, and then into the next year. So these are the kind of scenarios I'm throwing around. And if we look at this last rally, it kind of does have the feel of a bear market rally. We've seen a few of those FANG stocks and tech stocks, sort of lead the way. And then we've seen many of the stocks in the market kind of not act well. We're seeing important sectors like corporate bonds, acting very poorly as well. And I just think that we're kind of in this topping phase. And the question is, just from a market action standpoint, have we seen the nominal tops, say in the Dow and S&P in January, or are we going to maybe see one more surge higher where the averages make new highs, but many stocks kind of do not, right? And one problem we have with this kind of correction rally is sentiment is still very, very bullish. You would like to see a lot more bearish sentiment creep into the markets on a correction like we saw in February. But you look at investors' intelligence, you still got 55% bulls to 17% bears on over 3-to-1 ratio, historically a very high level. So people really aren't fearful. The VIX, dropped right back into the mid-teens. And this doesn't mean that we're going to roll over right away, but I would think that we could still potentially be in a topping formation.
Well, even if we're in a topping formation, it's possible, later this year. You cited the 2987 examples. In both those years, there was a final run later in the summer. And I was watching CNBC on Friday when the NASDAQ was making a new high. It was up over 100 points. And they had a gentleman on there who said his recommendation was to buy May or June calls on the NASDAQ 100 and just gamble and lever up, and because he was predicting a massive rally to take place, and he said that's what you need to do. So do you think it's still time to gamble and try to make big swings and try to take $100 and make it into $1 million?
No, I think at this point it is the time to get really kind of more defensive. I would only say this: if you really want to do that sort of thing, I think like with a lot of stocks, you could do like straddle trades, right? Where you do a put and a call, say each up 10 to 20% out of the money for 6 to 9 months out. And with that kind of trade, what would happen is if you get a big move in either direction, you're going to make money. And so, so if you're really someone who is bullish and believes that this can keep going up, like you could say, for example, get a stock like Netflix, you'll buy the 330 calls and the 270 puts. This is not a recommendation. I have no position to trade like this, but this is just an example. and say do that 6 months out, like out into September, October, and then if Netflix has a huge move, like Netflix continues to move higher to 400 or 500, you're going to make money on that trade. And if Netflix completely crashes, to $150 or something, you're going to make money on that trade. So that is what I would recommend, because of the valuations that we've seen in that huge blow off in the market we saw in the fourth quarter of last year. I would think that we're not just going to continue in kind of a tight range for a lengthy period of time. I would think that sometime over into the summer or the fall, we're either going to have one more huge move to the upside, or we're going to have like some really bad move to the downside. I think one thing that's going to cause this move to the downside is really, talking about stock buybacks and financial engineering. We're seeing interest rates rise at both the government level, corporate bond level, etc. And after this year, when the one-time gain from kind of the corporate tax cuts and the repatriation of funds comes in for companies to kind of continue to financial engineer, I think as these rates creep up for them, their borrowing costs go up, you're going to see them pull back from that financial engineering. And I think over the second half of the year, especially in the third and fourth quarter, you're going to see the market start to recognize this. And basically the low volatility trade with the VIX spiking, in February is gone. The XIV blew up. And and then if the financial engineering trade goes away, all you really have left are the robot trades where they buy the moving averages, or the ETF trades by retail investors where they are just piling money into ETFs. So, and of course, this is all interlinked, that if the buyback trade disappears, well, that takes away support under the market. Then the market drops below the moving averages. Then the robots disappear, and then the retail investor panics, right? So these things are all kind of like interconnected. But that's something I really would look out for. And but by all accounts, this could be a record year for buybacks. But I really think next year, when now you've got that lower corporate tax rate more normalized, and it's not kind of like bonus money for a year, and when you've got the repatriation of funds done, which is really kind of a one-year event, you're going to continue to see this happen. I think one of the major problems in the debt markets is there's going to be $4 trillion of corporate debt rolled over between now and 2021, most of it investment grade, about 3.2 of that 4 trillion being investment grade. And then also you've got the government running an over $1 trillion deficit in the coming fiscal year. So you've got this huge amount of debt, the supply coming onto the market at the same time when the Federal Reserve says they're going to shrink their balance sheet. And at the same time, the ECB is starting to taper their QE. So you've got this kind of perfect storm scenario for corporate rates and government rates, where you've got the shrinking of the balance sheet, but more debt put on the market. I think that's why all these rallies we've seen in the TLT, or in government bonds or in investment grade corporate bonds have been so weak, because there's just too much supply coming onto the market with nothing there to soak it up, because you don't have, or soak it up, because you don't have the government's buying.
Well, one thing I want to ask you before you go is something I just noticed today, and it's kind of puzzling to me, is that over the past couple years, there's been a real focus on Facebook, NVIDIA, Netflix and Amazon, Google, and most of those stocks are still doing very well, outperforming the S&P or Dow this year. For instance, at the beginning of 2017, I watched Kramer do a New Year's special, and he recommended people to buy NVIDIA, and he was like going on and on, yelling about it. It's like the greatest stock to buy, basically. But what's funny to me is that over the past couple months, it seems like people aren't really talking about those stocks. Even on CNBC, they're not talking about those stocks like they used to, and instead, they're only talking about the overall pure action of the indices. It's kind of odd. What do you think is going on?
Well, I think two things that have happened is the indices themselves, when they blew off, especially in the fourth quarter last year, when you had this kind of parabolic run, they almost began trading like a FANG stock, right? And you had stocks like Boeing, like an old economy, so-called old economy, Dow stock. That's probably been the most parabolic stock of them all recently, and that's a company that makes airliners. That's not some some newfangled technology, right? So when you had those stocks really take off and go parabolic, I think people were just kind of looking at their ETFs and being like, well, I don't need to even be in FANG stocks because the Dow or S&P or NASDAQ are doing just as well. And then I think the other factor was this kind of blow off in the cryptocurrencies, in Bitcoin and Ethereum and these other currencies that, if you were a smaller investor and you were in these coins or you jumped into the party in these coins, again, those gains were way larger than the FANG stocks last year. So if you were like someone who wanted to do more kind of like speculative type trading, you would say, oh, I'd rather be in these FANG stocks. I'd rather be in these cryptocurrencies or just an index fund than these FANG stocks. And I think that's kind of why those FANG stocks went to the wayside that way. Because what's interesting is even though stocks like Netflix have continued to do very, very well, you're right. People don't talk about them as much anymore. You don't see them talked about all the time like they were at one point. It really was just indexing due to the strength in the market as a whole. And these cryptocurrencies kind of replacing the FANG stocks as kind of like the speculation, aggressive speculation of choice. I think that's really why you don't see them talked about anymore.
Well, I heard some gold stocks. They haven't broken out yet. If gold ever goes to 1350, I would think it will. Then they're good. Then I think they'll become the hot thing. But other than that, in my opinion, if there's any little sub sector out there that could do this, because I think the Bitcoin stuff's really dead myself. I think it might be the marijuana stocks. What do you think?
Well, there's two things. First of all, the cryptocurrencies. I've studied all these past bubbles, and what's kind of interesting about them is people think, it's like people talk about tulips or the South Sea bubble or Mississippi scheme that all kind of went to zero, very quickly. Well, let's say this isn't like that. This is just like the dot-coms in 2000. What usually happens with that kind of bubble is you get a big bust like we saw in January, February, and then you get this kind of rally. And then things will hold together in that sector for, say, 3 or 6 months. And then you'll kind of roll over and really start to go lower. If you go look at, for example, of gold and silver in 1980 when they were bubbles, they really began to break those February, March 1980 lows in early 1981. So if that kind of holds up, you'd probably see a lot of these cryptocurrencies really begin to break down, say, later this summer or even into the fall. And what's interesting is you talk about, bad internals. Really, Bitcoin has outperformed most of these other cryptocurrencies on this little bounce here. And I think that's just a sign that it's getting thinner and thinner on the rally. And, all the money that's in that sector is going into, kind of the big, most liquid one. And a lot of these, if you go look at stock, if you go sort of like Ripple's barely even bounced on this rally. And I think that's a sign that these things are going by the wayside. And then secondly, with marijuana stocks, I think in particular, I'm kind of more active in the Canadian marijuana sector. Mike and I bought a company that's going to be coming public, bought some shares in it in April, and I just bought another deal as well. And I think you have a kind of a set event there where in Canada in the summer, in July, August, is going to be the legalization and then the mass distribution, where they're going to be selling it all over the country. So you kind of got this event where maybe these stocks can continue to rally into that event and then maybe sell, maybe they'll sell off then after the news. So I still think, you have that kind of to take them higher. And also personally, it's like a real business, right? It's like we know all the money the tobacco companies or liquor companies have made over the years. Well, even though these marijuana stocks now trade at pretty high valuations, at some point, when they do enter some kind of bear market and their revenues are going to go up and up and up, and then at some point they'll become good value. So I think a lot of these stocks, especially if they're properly regulated, will actually have a future as really good companies. And I really can't say this for a lot of cryptocurrencies, which a lot of them I think are just, pure scams. So I really believe that the marijuana stocks ultimately are going to have a future. And by the way, if you're just someone who's aggressive, and I'm not really a short-term trader like that, and I don't like to chase, and all of my investment in the sector, by the way, is via, private placements or pre-IPOs. But if you were someone who was wanting to trade something, I'd be much more into trading the marijuana stocks right now than I would be into trading FANG stocks or cryptocurrencies.
Yeah, I think so too. Well, as we wrap up, people should know to go to your website, addictedtoprofits.net. And you already said you got some new posts on there, and I actually looked at a couple of them myself, so I recommend everyone go and check it out. And thanks for taking the time to talk to me and everyone else.
Yeah, thanks. And actually, just so you know, Mike,